Yeah, I can hear you fine.
Okay, perfect. Yep. So, welcome everyone to our weekly live session as usual. The date is Saturday, January 8th. And we've just finished the first trading week of the new year. So it was a pretty decent week. We had quite the rally in some of the large cap names, notably Tesla, which we were, holding a significant position in. Both short-term weeklies and as well as leaps, which we both exited the weeklies nicely and for a significant profit, as well as trim down some leaps on the way up, 85, 90, 95, etc. From our buy in and ads on the Friday previously. So that was great. Delivery numbers, as I mentioned, I reviewed them last week. Really great delivery numbers as I anticipated. And, we did get that squeeze as I expected. So really good there. Through the latter half of the week, we did get some sell-off, which obviously you saw, mainly as a result of FOMC. Some hawkish statements there. I'll share my thoughts on that, but just to give you kind of a brief, overview. I think overall, with regards to Powell's statements. I'm not sure if he will really actually go ahead and raise interest rates. You have to look at M2 and government spending, all the debt that they've put on, and actually raising interest rates. Especially as soon as let's say March, for example, would really kind of put them in the hole. So you have to kind of take that into consideration, and at that at that point, I believe personally that a lot of this is priced in, and that's the bearish action that we're seeing. So I'm continuing to remain bullish on select names. Once this when the market conditions change, you need to update your strategy. So as you've seen, for the past month or two, on my end, I've been focusing, as I've been kind of continually mentioning, on three names, on my end at least, SPY, Tesla, and Zoom, which I think are three really good names right now, and they've been performing well. I've been actively trading them as alerted, on the sell the large rips, and buy any significant dips. And it's been going really well. So as a lot of the market is bleeding, I don't really feel any of it, because my positions are doing exceptionally well. Especially Tesla, SPY. We had the 5% increase in a month as we went heavy on the leaps. Now we've pulled back about 2.5% from the new all-time highs that we reached earlier last week. And yeah, so while I'm actively trading that, I'm not really getting any of the pain. So it comes down to conviction as well. Like for example, Tesla, for example, on Friday we were selling off quite significantly. I welcome that sell off to enter short term call options and add more to the leaps, on high conviction. And the week after, those were rewarded exceptionally with significant returns there, as we had the largest dollar increase in Tesla, the stock, in in forever, right? That was the record breaking increase in a dollar amount on Tesla stock in a single day. So that was good. But yeah, so overall, I think I think that the sentiment overall is quite bearish, and I do think that a lot of these rates are kind of priced in. Market is pricing in a 90% chance of a rate increase in March. So I mean, when you're pricing in a 90% of a rate increase, and let's say we don't get a rate increase from the Fed, you can kind of guess how the market will go to. But more so, what to focus on is the Fed, reducing balance sheet, and they kind of hinted in that, but there is a bit of a curveball with the COVID variants as well that needs to be considered. That I don't think the market is completely considering, which is a little bit unexpected. So all of that, kind of put together, I think the overall sentiment is quite overly bearish in my opinion, but that's just my thoughts, and kind of continuing to watch and actively manage positions to hedge and not be too overexposed, and continually watching and actively managing to hedge myself on big rips, do take some profit, and big dips do average down, as you've seen me do. So yeah, that's my overall thoughts on the market overall, and in regards to FOMC that we had this past week. In regards to earnings, we are entering earnings week quite soon, going into the end of the month. But for now, we're still, not yet in earnings week, so not too many earnings that are notable. The only one notable really this week is the banks reporting on Friday. So I'll look at those numbers, keep an eye on those numbers, just to get a rough idea of some of the conditions of the bank that the banks are in, and it might be a fairly good play because financials are doing fairly well with this kind of rate increase being priced in, a potential rate increase being priced in. So that's one to keep a note of. And then other than that, TSMC reporting Thursday pre-market, as well as Delta Airlines. So those are two to be on watch, but likely will not play unless we get some significant opportunity there. Yeah, and then just to summarize as well, I think around now, these kind of market conditions, at least for the time being, long plays are good. So you've seen me, pretty much exclusively in leaps, so longer term plays. And I only kind of go shorter term and on good opportunities, like overnight SPY calls if we, have significant down day and the chart looks good for gap up or bounds. So I've been continually hitting those, for the past 2 months, right? Each and every one, overnight, or day trade Tesla calls. Those short terms on good opportunity, but for the most part, I think the longer term plays are the better option. In these sort of market conditions that we're in right now, as you've seen for the past month or two. And I think that's sort of the way to go. It with low risk and good reward as well. So yeah, but other than that, I'm just gonna pass it on to DJ to share his thoughts on his end, and go through his usual SPY analysis.
Yeah, sounds good. So, just to briefly overview the market overall, so it definitely seems like tech is trading significantly weaker as opposed to SPY. It is first week January, so it's not necessarily the week where small caps really bounce yet. It's usually around, I think, mid to late Jan. But having said that, a lot of them are making further new lows, and I believe that's because of the Fed statements and the market pricing further downside there. There is still, in my opinion, a very big squeeze rally that may occur for the small cap specifically. Like names like Square, PayPal, uh, Roku, these kind of small cap names that got beat up significantly hard. I think there is still a possible like very large rally, 50% plus that could occur in the next month or two. But it is also possible that the large caps kind of take over and the other sectors like banking, financials, and energy kind of just continue to go up and bring SPY up, whereas fangs and such kind of hold up QQQ, and the small caps continue to kind of slowly bleed and drift further away. That's basically what's been going on in the last month or two. Um, uh, Personally, I think it's a little bit weird because in an actual melt up, literally everything is supposed to go sky high, like Melta back in the MJ sector in 2018 or crypto in 2019. Like even if you have Bitcoin leading or a few select companies leading, like you have like hundreds or if not thousands of just random micro caps or penny stocks that are just absolutely printing as well. So to see both the indices near all-time highs and the large caps quite close to that end, but just continuous further movement on a lot of the micro caps and smaller caps, even during this week, that are already down a lot from all-time highs and tax loss. It's a little strange to me, so because of that, I don't really know. Even if we do get a final melt up on the way up, I don't really know if these will start to gain traction and even rally or squeeze at all, or if they're kind of just left behind and people will kind of just flow into the bigger names to kind of ride the last wave up. It's tricky to say, but I think those plays basically kind of just need to day trade them or swing as a lotto, but it's too hard to say if they will actually rally or melt up with the overall market, given how they traded in the last couple months, in my opinion. So on my end, you've seen a lot of kind of updating and rebalancing. So like Ramg mentions, you gotta adapt to the uh, different market environment. So I'm adapting to the current environment. Basically, reset majority of my portfolio to near cash. I am going to be playing more SPY. Going to be playing more SPY. Going to look to more financials and industrials, and going to be uh, still playing tech, but I think playing tech for more lotto or just kind of day trades. I think that's just a lot more safer of a strategy, and it would really suck, to kind of just position yourself in all these small caps and then kind of see the indices and everything melt up. And if they choose to continue to drift further, then you're missing a really big rally. Personally, I do think SPY will outperform QQQ again, even if we rally even if we rally to the final melt up, I think SPY outperforms here just because the market's pricing in these rate hikes, and regardless of whether they're coming as soon as March or not, they are definitely coming. So there is just less incentive to be buying tech, in my opinion, whereas SPY just has a lot of great kind of outlook, especially by spring, summer, possibly COVID and Omicron kind of ending, you'll see a lot of the reopening stocks. You'll see just a lot of boom in the industrial sector, and also the rate hikes benefit the banks. So I think there's more upside in SPY there than there is in QQQ. So it's the safer play, and we can I'll go over it, but we can see that even the last couple weeks or a month, and definitely see SPY has been outperforming QQQ in terms of higher highs and higher lows, and whereas tech is definitely struggling to say the least. Um, so on my end, right now I have a little bit of Bank of America BAC calls. I'm in some of the SPY leaps that Ramg alerted, in some PayPal, in some shares of GGPI, um, and I think a few more smaller positions. But overall, I think I'm sitting around 80 to 85% cash at the moment, just resetting. I don't want to position too big into the industrials and banks at the moment because they've had quite a rally this last week and a half. So I do think I do think at least in the short term, both SPY and QQQ looks like it can kind of pull back a little bit more. So I'll be using that pullback to add on the sectors sort of strength. But overall, going to be swinging relatively less unless just taking like June to September kind of calls. I think even the February or March calls, even though they seem sufficient with a month or two at time, because they're kind of out of the money and just a week's worth of pullback really hurts the premiums quite a bit. So I think I'll be looking to like any long swing positions. I'll be looking at June to September from now on, and even for day trades, I might day trade a weekly, a daily, or a couple weeks out, or I might even day trade like a month out call, just to see the conditions depending on the market. So we'll get into the charting for SPY. So I mean overall SPY daily is a very nice uptrend. It's pretty much just higher lows and higher highs pretty much throughout the last few months, and it's been uptrending. So we can kind of see this range on SPY right here, and there is we are pulling back a bit from the high. It is still healthy. We are holding the lows. There's a double bottom here, around 449. I think having dropped the daily MA and middle Bollinger Band, and if we hold 464, we can see a retest as soon as early next week, Monday, pretty much. But if we do drop this, I think there's a possibility that tech QQQ will drag down the markets, hence dragging down SPY a little bit. So I wouldn't be surprised to see a pullback on SPY. I think we can hit somewhere around this range, between 456 to 460 in the coming week or so. Especially QQQ breaks the triple bottom, in which we'll see later. I think it can get dragged down to this area, and then I think that would be a pretty good area to add. I don't really think we will see 440s or 450 level that Hunter mentioned, unless QQQ really breaks hard and like starts to free fall and rates skyrocket to 2% in the span of like a few days or a week. Then I think it might be possible to see further downside. But if we were to break this 440 449 level on SPY, that's also breaking like kind of a strong daily uptrend. So it doesn't make too much sense for me if we're going to melt up in Q1 and Q2 to break this type of uptrend. So I don't really expect to drop below this 449 level on SPY. So 450 might be possible, but I'm thinking the mid 450s on SPY is it's likely to be a good place to kind of just add and hold. QQQ, this is what I'm talking about. The kind of weaker indice as mentioned, and key levels here, you can kind of already see some have broken. There's a low here, here, and there, and we have been drifting lower. So it is relatively bearish. We are basically setting lower highs and lower lows, and this rally, kind of Santa rally to close out the year, we did not break all-time highs, and now we are rallying here. So we could see a bit of a bounce back up, but to change the trend, it would be quite hard. We would need to see, a very strong move to the upside, and it will take quite a bit. I think with just how the meetings have gone, and how the first week has played out, I wouldn't be too surprised to see us make a move back around the 360 levels, mid 360s on QQQ. I do think there's a gap at 360 exactly, 360 to 362. There's a gap on QQQ. Not too sure how low we'll go, but if we do break these levels of supports, in which it's looking like it really does want to break the multiple bottoms that were created, there is not really a lot of support levels left on QQQ. So I could definitely see a bit of a flush coming on, though it's possible we might hold this bottom and get a bit of a relief bounce before that happens. Weekly chart, QQQ, it's been like a seesaw back and forth for the last kind of month and a half, I guess you could say. But this being January, I think it's more significant because this is kind of the start to the new year, and it generally kind of sets the early sentiment and tone. And for this to occur, like a pretty much, what does it say, 6 or 7% drop in the first week in January, that's a very bearish sentiment. And we are dropping once again. We're kind of just dropping and retaking the weekly EMAs over and over, but it overall doesn't look like we are hitting higher highs on QQQ, though we might do it later on. It doesn't really seem like there's anything in the next week or two to kind of change sentiment, to kind of make people chase tech and kind of rebuy tech, other than just kind of a relief bounce, in my opinion. I think both traders and investors are right now selling. They're selling into strength on tech in particular, as in like any bounces and stuff. They are basically lowering their holdings and emptying their portfolio, and or hedging and buying some puts on relief rallies, because I think it's kind of quite clear that overall tech is kind of just the higher kind of risk trade, as opposed to something like SPY at the moment. You're just kind of putting yourself at a higher risk. Although you can rally, it might still not rally as hard as SPY, whereas the downside is much more apparent with all these rate hikes coming and growth companies still being quite valued at very high valuations in general. So that's my take on it. I think use use QQQ's weakness to kind of add on opportunities on SPY and the likes of components of SPY. I think tech is going to be short term dragging down some of the market, and I think that will provide pretty good opportunities to kind of add on good and select names. I'm not charting Tesla, but I think Tesla is one of those companies that can definitely hit all-time highs and continue to rally. I think for QQQ, I really do think the focus is on the more large cap names, stuff like FANG. I think Apple will most likely rally up as well. Amazon, I actually think it's quite weak, and it's been quite weak and apparent. And also they kind of reached their peak sales during the pandemic, so I don't really see them performing too well, and the new leadership change hasn't been doing too well. So I don't really think Amazon is going to really melt up by any means anymore. But stuff like I think Google, Google, Microsoft, NVDA, AMD, Qualcomm, Apple, I think these are the and Tesla. I think these are the type of stocks that will continue to melt up. And then the smaller caps, such as like Shopify, I don't know, Lemonade, the Roku, Wayfair, these Zoom, these type of things, I think can get a relief rally, but they're not going to be trading anywhere close to the all-time highs that they kind of produced in in 2021. I think at most they could see a strong, rally off the bottom, maybe 30-40% something off wherever the low is when we get it. But it by no means do I think any of them have the potential to kind of keep pushing all-time highs from there. And then just moving on, Bank of America, BAC. The reason I picked this as opposed to something like JP Morgan or Goldman Sachs for now is because I think it is the strongest chart in terms of banks at the moment, because we just broke pretty much all-time highs this week. So it's like fresh new all-time high being broken. We are quite overextended, so which is why I only alerted quite like a small position just for now. There's about a 10% move in the span of like a week. That's very big for the banking and financial institution sector. So do have a small position. If we continue to rally up, we might see, a move to near 50. I would just kind of sell and take more profit currently and wait for kind of, a bit of a more drawn down, consolidation, maybe back into 48, 47 areas where I can, retake some June calls for some better risk reward there, and I'll probably add a little bit more heavy once we get there. I think JP Morgan reports next week, so based on how they perform, it could affect how BAC performs too. But overall, their June calls, and I think they're priced in pretty fairly in terms of option premium. Could be a little bit cheaper, but I don't think it's priced too poorly in terms of IV or anything. So I would be adding on significant dips and basically flipping on, significant rips. PayPal, this one has been really strange in my opinion. Just I think it's gotten maybe 3 or 4 opportunities where it definitively looks like it's going to break out of this tightening range and just break above the daily upper Bollinger and head towards like 205, 210. There's a gap, all the way at 225 and 217 levels. And it looks like multiple times it's setting up perfectly for kind of a breakout day. And I think the timing is just whenever it's set up perfectly to run, the next day rates skyrocket and the QQQ drops 2%, and then it literally just goes back down. And then it doesn't look too hot, but then you kind of just add and hold the position, and all of a sudden it just recovers again. And if you remove that day, you may hit 195 that day. It looked like it was going to kind of trend break and rally again, close week, and ended up dumping again on Friday. So this is just still in this tightening range pretty much below the daily. Upper Bollinger and lower Bollinger is trading in this tightening pattern for pretty much the last 3 to 4 weeks. This is definitely a tax loss kind of stock as well. Like we're trading well, at 270, 280 levels for a vast majority, and where we seemingly kind of just dropped 40, 50% in the span of a month. And it kind of happened like out of the blue. There was that, rumor buying Pinterest that kind of tanked it 15%, and then since then it just never really recovered. So it didn't. It seems a bit strange because there was no real kind of reason to kind of just fall off that. But I still think the risk reward on this is quite good. It's just tricky because QQQ is relatively weak, but with how far we've fallen, I do think QQQ will find its bottom relatively soon, and markets will turn around in the coming mid to late Jan. So in about 2 to 3 weeks, I think even the small caps should see some more recovery as the 30-day buyback period should kind of come back. PayPal calls are like relatively fairly priced. It's just that with the chop up and down, they are definitely getting chopped up, especially the short-term calls. I may look to add some further calls out, or may just look to kind of play a weekly lotto. I really do think it is in its range. It's about like literally 2 or 3 days away from just making a 10% move up to the 200 plus levels, where it could literally happen in a span of 1 or 2 days. It just needs 2 green days, and it's basically out. Weekly chart, you can see as well, weekly MA has just been declining. Price action has been flat. I think we roughly almost got to test the weekly MA. Next week, it should be trading around 196. So if we can break 196, it would be squeezing the daily Bollinger as well as, intersecting the weekly for the first time. And there's quite a lot of room to kind of make a bounce up on the weekly. So I still think risk reward favors this pretty well. Might be looking to add some February calls next week on top of the March ones. May look a little bit further as well, or just look to add a weekly if I think the bottom is it on tech. But I think out of the tech names on my end, I think PayPal is one that, in my opinion, surely should bounce, and it's not one of those quote unquote garbage companies. And I think it's quite good risk reward here. And truly, when QQQ finds its bottom and stabilizes, I think this will be well above 200 to 10 to say the least. So that's really kind of it on my end. It was mostly just a week of rebalancing and changing of strategy, and I'm just going to kind of play the next couple months, or play the next couple months and couple quarters, based on what I've been seeing. So I am adding some more different tickers onto my watch list, being less tech concentrated. Being pretty much the last year and a half, I've been only in tech, so I haven't been watching too many other sectors and tickers, and been only trading tech for the last year and a half because that's just been what's working. But now with how quick the environment has changed, I think it's time to kind of adapt and change some things up. Couple names that I can quickly mention that I think I'll be adding on some, dips. I think Caterpillar is just CAT cat. This is quite a nice chart. This is the weekly chart, so this is quite weekly flattening consolidation and a fresh weekly breakout. One of the industrial stock leaders, but daily chart is quite overextended. We're talking about like almost a 8-10% move on a stock like this in a span of 4 days. I don't really want to buy the top of this kind of range, so I just like BAC kind of want to wait for some sort of higher low on the pullback to kind of add this maybe around the 215 levels. Another one is like on Deere DE. It's also performing quite well, but it's also up like 10% in just the span of some days. And another couple of names top of my head, I think Costco is a pretty good one. I might look to add Costco next week even for a swing, because we're actually on the downtrend. So we dropped about, I think, 6-7% in the last week or so. So if we see some weakness and we drop to the lower 500 levels, I think I'll take a swing position here, because we're actually getting a bit of a pull. So yeah, overall, that's pretty much my thoughts. So I'm going to pass it over to Ramg for him to share about his.
Could test this bottom of the range. We're still sort of in this range, and here we are at the bottom of this range. Pretty solid support here. If we start to fall under here with some conviction, I think that it might be a little bit bearish in the short term, unless we can, kind of recover back into this range. But overall, as I've been mentioning, I think the sentiment is overall pretty significantly bearish. So I do think that we can get a at least a short term bounce here on QQQ, tech, and I think we should stay relatively in this range. If we do dip under this range, I think we can kind of recover back into the range on some strength, and I will likely play some bounce plays on QQQ. Tesla, just to recap, early in the week, we did have the delivery numbers, which I reviewed last week. Really good, just to highlight it, on the January 3rd move, just a major move, gap up, and we, continually extended throughout the day, a complete, what I call a ramp day, just continue buying throughout the day. We closed off about, I think, 14%, um, almost 15% up, from the January 31st close, and our calls, increased significantly. I think they went from about $14 to, it actually reached a high of, I believe, $90. We did sell around, 60, 65, which is good, because, the following preceding days, we proceeded to sell off quite significantly. So the short term calls, as I mentioned, take those profit and go a little bit risk off. With the leaps, you can be a little bit more liberal with them. And I did wait for a bit of a sell off, and we did catch the low of the day on Thursday and Friday. We caught a mid level, and then I added again at the lows at close on Friday on the leaps. So um, pretty good. Also, on a fundamental level, you have to realize as well with Tesla, we are, below now the point prior to our delivery numbers. So it is pretty significant. I mentioned as well last week that I thought we'd see quite a few analyst upgrades because these really blew out Wall Street estimates. As I predicted, it'll continue happening. I've kind of reiterated this with the EV names and legacy names. Wall Street doesn't know how to calculate these numbers, and they are under estimating Tesla numbers and overestimating legacy numbers, and it'll prove to be detrimental, and continuous until they really start to adjust, and it's because of the incremental growth that Tesla pursues with their continued factories and ramping, and their strategy of real focus on 3 and wide deliveries, as opposed to SNX. And then once they are ramped, they'll kind of complete the shift based on an algorithm of demand and wait times. So not to let wait times get too long, as I've mentioned a few months ago, when wait times were kind of getting exceedingly long, to record long wait times. So yeah, it's pretty good. We did get about 3 to 4 analyst upgrades throughout the week. I think more are coming. It's only been a week, and sometimes these firms are delayed. So when those analyst upgrades continually come in, I think we will it will help prop up the share price a little bit as well. But looks good overall. At the leaps, looks good. There is that 1,000 psychological level, which pretty much readily holds. So it looks good overall, and continuing to hold those Tesla leaps. I think Tesla will continue to lead the market, so it won't let its leadership spot go. So looks pretty good, and that early in the week move, quite significant, and a great profit to start off the year. Moving on to Zoom, Zoom, same thing. I just wanted to bring this up, but not much of a change. We're still, kind of, in that kind of consolidation phase. It's headed a bit lower. We're still in the range of 170 to 190. So just kind of continuing to actively manage the position a little bit. Continuing to add more shares. Zoom, as I mentioned again, I think it's sort of the best play right now, based on the fact that of its valuation. Zoom is really just a cash cow. Revenue is growing quite significantly. We're dropping to a really low PE. And the valuation here is just a really great buy. So you've been seeing that I've kind of continually been adding shares here on Zoom. So yeah, continues to be a good play overall, Zoom. And I mentioned a lot of the rates are kind of priced into the stock here. So that's why we've seen that pretty much 80% drop from highs. And so these are the levels I think buying is really good. Also, this is why I kind of mentioned I like the shares better rather than leaps. But as we the longer we consolidate, the better the leaps look. So maybe I might look to add a bit more of a larger position in leaps. Right now, I really don't have much of a position in leaps. I mentioned I like the shares better because of this, because we've been about a little bit over a month now, and we've kind of been just continually in a range, kind of dropping a little bit more, and now we're kind of at new lows here. So that's why the shares are a little bit better in my opinion, because as for as long as it consolidates, or kind of continues to drip a little bit, we don't really get too much of an effect on the shares to the downside, whereas the leaps will kind of continue to bleed with kind of action like this. Even if we're in just a straight range, the leaps are kind of continuing to bleed a little bit, not too much, because they are let's say a year out, or 6 months out, not too much, but they are getting a little bit hit. And with the Zoom leaps, and a lot of these growth names, the premiums aren't too great. They're not really as discounted as I'd like for names that have dropped 40 to 80%. I'd like a little bit more of a discounted premium on some of these calls, but the IV is still pretty high on these. So I think the shares are the better way to go. But as I mentioned, the longer we stay flat or a little bit bearish, the better and more attractive the leap premiums sort of look. And then I just wanted to mention, Bitcoin, we are sitting at a pretty major support here. That we've kind of held, which was sort of previous resistance here. So I think I might add Bitcoin again, on at these levels. I think Bitcoin will move quite similar to QQQ and tech. We've seen it kind of correlate quite significantly with SPY and S&P 500, but I think we might move more correlated to Nasdaq, as rates are kind of rates and inflation fears are kind of putting a little bit of a damper on Bitcoin. More so rates, I think, because it is sort of a growth risk asset, right? At least in the eyes of individuals. So at this point, right? So I think I'm going to add around here. So yeah, it looks pretty good still. If we do break this again, I think it'll be quite similar to QQQ, at a pretty major pivot point. So yeah, but overall, I think looks okay. Just kind of adding and selling on kind of major rips and dips. The this is sort of, I think, more of a longer term play. I think if you can kind of hold it, but overall, I think it'll correlate quite similar to QQQ or Nasdaq overall, in my opinion. So yeah, I'm going to likely add over here. As I started the live session, we are basically pretty much right at the line, and we kind of bounced a little bit, but Looks pretty good on Bitcoin at this kind of major support level. If we are to bounce, I think we can, at least make a pretty small bounce. Like I said, pretty similar to QQQ, where we're at currently with pretty major support in the range right now. So overall, not too much to go over this week. I mentioned my thoughts on FOMC and Powell's discussions and his comments there. I think the hawkish sentiment. I don't think we'll see too much follow through. I think overall overall market sentiment is quite bearish, and I think a lot of the things that the Fed is saying is pretty much being priced in. But I don't know if we'll really see the action from the Fed. So, because it's quite detrimental, and it's important to kind of realize that the Fed is at a really critical point at this time where if they're not too careful, we can really see pretty much a disaster in the U.S. economy. So I think the Fed realizes this. They've even said it, both Powell and um, some of the other Fed members. They've literally came out and said we're at a kind of critical point, so we need to be careful. So with that being said, I think I don't think any sort of drastic moves will be made, and a lot of it's being priced in, but into the market. But I doubt that we will really begin to see that sort of action from the Fed. So those are my overall thoughts on that as well. But that's about it. On my end, not too much to go over this week. Just what I mentioned with continuing with the strategy. On my end, I'm just kind of focused on SPY, Tesla, Zoom. I think sorry, just Za just asked a question. So if Bitcoin breaks below this level, what's the next support possible for bounce? Next support is pretty low. Around 30K would look probably more likely. Although I think that even if we do break below this, we do have the chance to kind of garner some strength and enter back into the range. So I think it'll move pretty similar to QQQ, where I mentioned the same thing. If we break below this, it's quite bearish, but I think we do have the possibility of some strength to lift us up back into this range. So I mentioned it last week. I'm thinking Bitcoin will move quite similar to Nasdaq. Um, overall, especially just given the sentiment towards both the names, with the fear of 10-year and yields, and rate increases. I think all of that is sort of factoring in. So both of these are quite volatile, whereas SPY is a little bit more protected overall because of its composition as well. So that's my thoughts on that. But yeah, just to reiterate, again, with the FOMC, I mentioned my thoughts, and with the strategy, continuing the stream strategy, just kind of focused on some of those larger names, and as well as Zoom on my end in shares. I think are really good. It's a really good value and risk reward at these levels. So you've seen I've been kind of continually accumulating shares on Zoom. I think it's a really good name, and at this value, I think it's just a clear buy. And a lot of again, I think a lot of people are scared because of it's a stay-at-home stock, and because of inflation and rate increases, etc. But I again, I think it's I mentioned it last week as well. I think a lot of it's priced into Zoom, right? So I don't think it will get any sort of significant downside. I think the risk reward here at these levels are really good. And if you're entering in shares, not too much downside risk is evident there, whereas the upside is pretty significant on Zoom. I think we could you could see a quite a large move up. So but that's pretty much my thoughts overall for this week. So I hope everyone has an amazing remainder of the weekend, and we'll be back on Monday to go get this money, guys. Also, one more thing to add before I go. I mentioned it last week in the chat as well. Matterport. We have the warrant redemption. I think on the 14th or the 12th. But whatever that date is, as you saw, we pretty much exited the whole position. Mainly we're holding warrants, and then once the warrants were done, exited the shares. So I'll be likely buying that back at least for a short term play. Solid company, and we've sold off. From where we sold our position, it's down. Really significantly. It was at around 37 highs, and I mean now we're at 15 and continuing to drop. So it's great. I'd like to continue to see lower into warrant redemption, and we'll scoop those up, and maybe even some options. I haven't looked at the options on Matterport, but I assume they're probably likely quite beat up now. So pretty good there. And then maybe if they're not priced correctly, possibly maybe some covered calls there, hedge some downside, and position it correctly. So even if we get significant upside, we're benefiting regardless. So yeah, I'll alert that next week as we see warrant redemption. I'll confirm the date as well. So yeah, I think that's a really good play for next week. So I'll keep an eye on that. But yeah, that's about it on my end. So I hope everyone has a great remainder of the weekend, and we'll be back on Monday to go get this money, guys. So have a great weekend, everyone, and enjoy.
Yeah, cheers, everyone.